Are we on the brink of recession, and how scared should we be? Should we be panicking about the shenanigans in the UK bond market? And for the boring bit, CSL reaffirms profit guidance, which actually is good news. I'm Peter Switzer.
I'm Paul Ricardo.
And we're mad about money. Well, Paul, brink of recession. What do you reckon?
Well, look, I don't think in Australia, Pete, but look, clearly there's global pressures. The IMF has come out and told us how bad it's going to get.
They're never wrong, the IMF.
Never wrong, the IMF. Don't take too much notice of that one. But look, clearly growth is slowing. I think the issue, we should be a little bit concerned about what's going on in China at the moment.
Yeah.
You know, with as they continue to fight COVID. Look, the Australian economy is ticking along, but we're not on the brink of recession. So and let's not make any bones about it. But clearly, the global economy is slowing a little bit, and I guess that's a negative for Australia. Yeah,
because we're a big exporter, so it makes sense that the IMF downgrades our growth, which was supposed to be around 2.5%. Pulled back to about 1.9. It's still a good number compared to an economy not going to recession. I guess our big hope, Paul, is I think Europe and the UK will go into recession because Putin, the gas problems, all that sort of stuff is going to hurt that area. The Yanks are probably 60-40 chance of going into recession. I always said 50-50, but like Jamie Dimon and people like that are all coming out saying, but Jamie Dimon's been wrong a lot.
He has been.
Invested a lot of money in WeWork, didn't he? Big mistake. But I think there's a very good chance that we could avoid a recession in the US, but we're a much better chance. But the stock market would go down initially, wouldn't it? But then they would cut interest rates and stocks would probably rebound out of a recession.
Yeah, look, I think for the market, it's going to be a tough few months, Pete. We're seeing that it is trading lower, and so you're starting to say this now, are we in bear market really? Yeah. A little bit. Look, I think just put this forecast to one side. We're going to see a lot more bad news, but still, unemployment is so low, and consumers have a lot of money, and the economy here is not about to stall.
And the implication on the October 25 budget will probably mean that Dr. Jim Chalmers won't go as hard as he might have if there was less recession threats around.
Yeah, I think that's right.
Let's go to the UK bond market, and you're the bond expert around here, Paul. What the hell's going on there?
Well, this is getting a lot of traction in bond markets and in markets because the UK government is just hopeless, right? Absolutely, the Labor opposition ain't much better, but they have such a commanding lead in the polls, and the Tories will have another till May 2024 potentially. So we've got this crazy. What upset the market was the government and the Bank of England were acting in different directions, right? Yeah. So Bank of England increasing interest rates
for responsibility reasons
to drive inflation lower, and out comes the UK government and abolishes the highest tax rate and all this other sort of stuff that's just going to stimulate the economy. So you've got, and then the bank
pro-inflation, good for fighting recession, but bad for fighting inflation. Yeah. And if inflation goes high, you get a recession anyway.
And a whole lot more bonds had to be issued. So the Bank of England had to step in. It's only stepped in briefly, and that's what's translating into the bond market. So what you've got to get is what you want is a central bank and government for both monetary policy and fiscal policy working in the same direction. Yeah. In the UK, they're working in opposite directions. And that's what really scared the bond market. And the UK, we had a bit of, over a couple of weeks, the Bank of England stepped in to sort of calm nerves. It's now finished, and that's put a bit more pressure down on bond prices. So you see that in the United States last night. Bond markets, 10-year bonds are back up getting back towards 4%. I mean, people are still, think that the Reserve Bank, the central bank there is going to go really hard. And that's what
you're talking about UK or the US?
Well, now I'm back in the US, but you're getting, the markets do work together. So, the inflation numbers out in the next day or two are pretty important for what happens in the US.
Yeah, and look, interestingly, the US market was up overnight. If they, and I guess they're hoping that eventually the statistics will catch up with some of the forward indicators which suggest the inflation's falling. If that inflation number on Thursday is better than expected, do you think the stock market will go for a nice ride higher?
I think we can see a rally, absolutely. Because, when you say the US market was up, well, the Dow was up, the NASDAQ was down, and again, the Dow finished almost on its lows, right? Yeah. So it was a pretty disappointing performance.
Yeah. But the reason they're not totally thinking Thursday's going to be a disastrous number. If it was, it's
well,
still an
I
event,
guess
wouldn't
the
it?
positive is they're not buying into it. So last time they were all getting bullish ahead of it, and I guess didn't get it. So I guess we've got to see that. People want to see that the Fed is going to sort of not take the brakes off, but not go as hard as perhaps some fears.
Because if it was, say, for example, let's say a shock number, say it came in at 6.9%, well then the market would say, oh, well, the next rate rise goes from 0.750 to 0.5%. They would pull back and the market would like that, wouldn't they? So that's probably the context. If it's a number around high 7s or low 8s, we're in trouble, the market will sell off. If it's a number closer to a high 6, well, the market would love it. But that's just guesswork.
Yeah, I mean, I guess the most, for the bulls out there, is the positive is the market sold into this, right?
Yeah.
And so, we see markets have always look ahead, and when they're nenegative instead of something, the chances are the figure is, even an okay figure or figure on expectations might be a positive, right?
Yeah.
So let's see what happens over the next couple of days.
And then people have to work out, do they buy the dip or sell the rip, which is the new one they're talking about now. Let's go to CSL, Paul. I call it the boring bit, but it's great that a good company like this reaffirms profit guidance. What are they saying?
Yeah, so for investors, we're in AGM season's kicked off. We had Telstra yesterday, CSL's this morning, and they've basically reaffirmed profit guidance. They're going to update. That's the guidance they provided back in August, but that's a good sign.
Yep.
That doesn't include the Vifa acquisition, which has now been completed, and so there's going to be an updated guidance coming out post Vifa.
They won't wait till February. They'll do it before.
No, they've got a date on that. They're doing another market update in a couple of weeks' time.
Okay.
So, but what they're suggesting is their revenue range of about a 7 to 11% growth in revenue on a constant currency basis on the existing business. That's okay.
Yeah.
That's after 3 and a bit months of trading. So you've got to say that's good news. And so it will help CSL a little bit today. We've also got, but we're going to, for the investors out there, AGMs, most companies will provide some sort of trading guidance or market commentary.
Yep.
And so we're in that sort of season over the next 4 to 6 weeks. So lots of news from companies in terms of how they're going.
Yeah. Well, I've always been arguing that if we can get some progress on inflation, the December quarter will be the quarter when the stock market turns around. But we do need to get some good inflation news, or else I'm going to have to push it out till the next quarter. And I don't want to do that because most forecasters confidently predict until they're wrong, then they confidently predict a new prediction, which is often wrong as well. So fingers crossed I'm right on this. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.